Hello guys, a quick video of 5 minute or 10 minute. I won't exceed that time limit this time because I am a little busy right nowadays. So yeah, when it comes to the trading, um, is the most important thing is position sizing or risk management or whatever we call it. We should know our entry point and you know even more than importantly before we knowing about where to enter, we should think about where to exit, because sometimes you make the market orders, which is an instant type order. You get the position right after your entry. So you should be thinking about where is your invalidation and where is your take profit, which is the case you want to be determining your risk reward ratio. If it is only a higher, or if it is according to your setup, you can take it or you can leave it behind. Um, so it's very important thing you should be knowing about the risk management calculation and stuff. My trading methodology is like marking out the levels, that is major and important. And most often I get a vacuum between the levels. Okay, I just only need to smack through these levels. I won't do the limit orders. Anyway, I look for the price to get a reaction, which should be in a small time frame like 3 minute or 5 minute, even 1 minute. Sometime I refer to. Sometimes I will go even smaller than the 1 minute, like tick sizes. When I use the platforms like Exo Charts or Atas or some platforms like that. So you can see this price gave a nice reaction from this RPOC, this range POC that we were in. So we got a nice rally there. So I would be waiting for price to get a range reaction, and I will set my risk reward ratio tool here, and I will be keeping my stop losses above it. Or even I can be going into a small time frame like 1 minute and see where the price is closed. So price closed here, and my stop loss is here. My target would be to the VAL. So it's giving me a nice 2.75 risk reward ratio. So if I'm risking, let's say $100 here, I can get a $275 in this trade. So that's what this risk to reward ratio means. And in this session, I'm going to calculate how you, sorry, I'm going to explain how you can calculate the position says that you want to enter into your trading platform when you take the entry. So it's very simple. There is no need to be getting complicated. Your take this option here, inputs, and you put your account size here. If you are trading with $1,000, you can put it here. If you are trading with a $10,000, you can put that there. So let's say for the simplicity of mathematics, I'm just putting $1,000 here, and a lot size means what is your leverage, what leverage you are using for that particular trade. And I would like to use the a mid leverage. Sometimes even if you have a opportunity to use the 100x leverages in some exchanges, I never prefer that to use, because the reason is that the fees that you get when you use a higher leverages, um, yeah, it's ridiculously big amount of fees that you needed to pay to the exchanges. So the moderate sort of leverage is 20x or 25x that I mostly use. It doesn't matter which leverage you are using into your trades, and it only matters your position sizing. That is what I give a focus to. Okay, so I'm just putting a 20x leverage here, and risk. This is the main and major component in this area. If you're risking 1% of your account, which is When it comes to $1,000, the 1% of the $1,000 is $10. Okay, if even if you get stopped out from this trade, you only lose one percentage from that trade. Okay, so there is still how many the methodology there you can um, cut your risk before even price reaching here. So let's say for an example, if price you look the price action structure here, which is sort of have created ledge here, which is a sort of some sort of a confirmation. And if price is breaking above of this ledge by creating huge influx uh, moves, or you can look it in the order flow or footprint charts to get if price is making uh, yeah. I'm not deviating the topics, but you can still get a chance to close your trades of, let's say for an example, if price moving into here, you were supposed to TP here, and price moved back into the zone and playing ranging here and breaking this, and most probably maybe it's gonna be taking the that stop of you, and it may stopped out you from that trade. But we don't know what's happen. You can be like stick. You can be with two sort of traders. One is stick to the plan whatever happens. So this is the first category. You just you can be like passive sort of mindset. You can make your entry, set your stop losses, and whatever happens inside of this area, you never give any attentions to that. So most often this is a nice idea if you have if you're trading nice liquidity stuffs in cryptocurrencies like Bitcoin and Ethereum. There's have nice liquidity, and the chance of you getting slipped, you get the slippage when you're getting stopped or very 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 less. But sometimes you trade the altcoins, which gives you nice volatility more often. So like some altcoins are recently traded the people USDT, which is a nice volume on volatility sometimes, but less liquidity when compared to the Bitcoin, and you get more often big slippages when you get stopped out. I got it the same way. I got a around I set a stop loss of 1% of my entire account on over that trade, and I got stopped out, and I lost like 2.5 or 2.6, near 3% of my total account I lost over that trade. um, but I only intended to lose only 1% risk 1%, but it's not the way we think, because when this area triggers, it's a stop, it's a stop market order is what our stop losses are. It's a market order. So if there is not enough buying in these areas, buy orders, sorry, sell orders, because the shorts are closed in a buy market order. So if there is no sell limits here, price will likely going up to find that liquidity, and you get slipped out, and you get big slippages. So sorry, that is something you want to be uh, really cautious about. Okay, so sorry. Okay, so in that cases, what I personally do is, if price is more playing kind of range here above of my entry point into my risk area. So if I'm becoming a lot of time underwater, I would be likely cutting the risk to half. Okay, so that's what I personally do to avoid that sort of a slippage in lower liquidity altcoins. So you can be, you can manage that in that way. So the other, the first approach, sticking to the plan is really better, and that is what I prefer when I trade more liquid stuffs like gold and Bitcoin or Ethereum or some sort of like that. Okay, so here is how you can find your position sizing. Okay, you gave the settings here, 20x leverage. And okay, if you are using 20x leverage, you put that on one risk, a 1% risk. Then the next process is really simple. Either you can enter this 63 quantity directly into your exchange platform. There you can get a options to enter your quantity. It's 63 .291, or you can just copy the price. Okay, you can copy the price and come back to the calculator and pass it that, and then you can multiply it with 63.291. So you get $25 is your position size, that you wanna, okay, your margin. So position size means your margin. Okay, so initial margin, not the margin you give for maintenance of your positions or something like that. Not that, but I only intended the you know the margin that you needed to put. So it's very simple. If you are changing your leverage into 25, you can change it here. If you are changing your risk to 3%, you can change that there. So you get okay, you get different sort of quantities. 151 .899 into, you can fetch the current price action, so sorry, the current price. So you can mass multiply. 59 bucks is your margin. Okay, this is how you can calculate the margin. So I hope you guys sort of understood the entire concept of how you can find your margin with your stop loss. And before there was some other sort of ways that was I explained to the people and my, okay, people in my Telegram group, or people, everybody. I shared the idea of calculating the margin in a way which is the basic calculation of it. It's sort of finding the stop loss and dividing with the, if you are using a $1,000 account, and 1% of it is $10, and dividing it with your stop loss distance, which is two, and sorry, okay, which is two, you get a 5 as an answer, and you multiply it with 100 and divide it by your leverage, whatever leverage you're using. If you are using a 550x leverage, you get a $10 as your margin too. And if you're using so if you're using 500 divided by 25x leverage, you can get a $20 as a margin. So it's the same concepts and same same stuffs, but this is the easiest method. You only needed to get this tool, which you can get here. And if you are planning to going along from sorry, this is the shorts tool. um, you can get the long position tool here. And if you suppose you got a nice reaction from the VAL, okay, never take entries before you get any sort of reactions. So, or here you have some sort of what we call um, order blocks or something like that here. So if you are planning an entry when price comes down to here and you want to be exiting at the VAL, or okay, so here, so you're waiting for actually the price to get down into this your entry. And sorry, okay, okay, if you want to move this thing without moving your entry. Okay, what I personally do is when I give the entries and exits, sometimes the trading view price and the Binance price, there will be several differences. Uh, you know, sometimes very rarely, very rare occursion. So that's why in my entire trading history, I only found that cases very rare trends. So that's why I would like to know that sort of experience. Okay, differences. So if I needed to give the stop losses, I just go to the coordinates and copy this price and then give to the stop losses. Okay. And if I need to my entry as a pending order, I mean limit order, I just go to here and just give a pass this and give to the Binance, go to the Binance or Bybit or whatever exchange that I use, and then just put the entry over there. That's just by copying this. And the next thing you can do is you got the position is already the margin. So it is if you are giving 1%, okay, you want to put the leverage here. Okay, I'm gonna put the 10x leverage, and you can see okay, 232.22 is my quantity, and I copy the price and go to here. Okay, uh, is that? Yeah, that. So 84 bucks, $84 is my margin. So I needed to put that in straight. Okay, so it's very easy methodology, guys, and practice it. And hope you guys benefited definitely. So that's it. Again, goodbye. And recently, I was so inactive in group. Um, yeah, inactive mainly in social medias and all. And I was literally, big busy sort of mood and also some health issues. So I will be back, guys. Stay tuned. Okay.